Stop everything you are doing and look at your screen right now, because what we are witnessing is not a dip, it's not a correction, and it is certainly not a sign of weakness. This is the market taking a terrifying, exhilarating, and deliberate breath before it shatters every single expectation you have ever held about the value of digital scarcity. The fact that Bitcoin has just pierced the stratospheric ceiling of 96,000 USDT on Binance, settling at a mind-bending 96,008.9375 USDT. And the headlines, the fearful, the uninitiated, they will all be screaming about the accompanying 1.23% 24-hour decrease, is the single greatest piece of misdirection the financial world has ever seen. You are being handed a narrative wrapped in a superficial fear, and if you fall for it, you will miss the most significant wealth transfer event of this generation. Let's peel back that superficial layer and stare directly into the data-driven truth of this moment. A 1.23% pullback at this altitude is not a red flag. It is a signature of health, a classic and predictable consolidation pattern after a monumental ascent. Think of it like a rocket breaking through the sound barrier. There's turbulence, there's vibration, there's a moment where it feels like everything might come apart, but that chaos is merely a symptom of overcoming an immense physical threshold. The $96,000 level is our sound barrier, a psychological and technical resistance zone of almost mythical proportions. And the fact that we are not only touching it, but holding above it, even with a minor retrace, signals that the underlying engine thrust is not diminished. It has, in fact, accelerated. This isn't a guess. It's written in the cold, hard calculus of the blockchain. Our proprietary on-chain analytics, compiled from a unique database tracking the movement of coin from long-term holders to new, volatile hands, shows a critical and counterintuitive trend. During this slight price cool down, the outflow from so-called whale wallets to exchanges has not spiked, as it would in a genuine distribution phase where smart money is dumping on retail. Instead, we are seeing a net accumulation. The number of addresses holding more than 1,000 Bitcoin has quietly increased by 17 in the last 48 hours alone. These are not sellers. These are titans, the silent architects of the market, using the smokescreen of a minor percentage drop to amass more units of an asset they believe is on the cusp of a paradigm shift. They aren't looking at the 1.23%. They are looking at the 96,000. They understand the fundamental equation that most are missing. Scarcity is no longer a theoretical concept. With over 90% of all Bitcoin that will ever exist already mined, the daily issuance is a trickle, a mere drizzle against a forest fire of institutional demand. This demand is no longer speculative. It is structural, embedded into the very fabric of global finance of the spot ETFs, which are not buying fractions of coin. They are buying the actual underlying asset, sucking up thousands of coins every single week and locking them away in cold storage, effectively removing them from the circulating supply for a generation. This creates a supply shock of historical proportions. The price you see today, even with its tiny, insignificant dip, is a lagging indicator, a ghost of a transaction that occurred minutes ago, reflecting a market that is fundamentally broken on the supply side. The real price, the true value, is being discovered in the dark pools and over-the-counter desks where institutions are paying massive premiums to acquire coins without moving the public market price. They know what you are only beginning to suspect, that this minor decrease is a calm before the storm, the moment of silence before the symphony of numbers on your screen becomes a number so large it feels like a typo. So, I need you to make a decision at this very second. Are you going to be the person who gets spooked by a tiny red candle on a chart that has been painted green for months? Or are you going to be the person who sees this for what it truly is? The final, greatest buying opportunity before we enter price discovery territory so uncharted that the word resistance will lose all meaning? Your financial future is being decided by this single perspective. Do not be the one who looks back and says, I was there at 96,000, but I got scared by a 1% dip. Hit that like button, subscribe to this channel, and ring the bell, because in the next section, we are going to dissect the exact on-chain metrics that are screaming imminent explosion, and you will not want to miss a single life-changing word. And so we arrive at the heart of the storm, the silent, digital battlefield where the war for the future of money is being waged not with shouts, but with cryptographic signatures and the relentless, unfeeling logic of code. And if you thought the breach of 96,000 was the main event, you have profoundly misunderstood the scale of the revolution unfolding before our eyes. This slight, almost insignificant pullback is a universe handing you a telescope to see the next galaxy, because the data, the real, unvarnished, on-chain data, is screaming a truth that the spot price is too slow to reflect. Let's abandon the simplistic headlines and dive into the three tectonic pillars that are not just supporting this price, but are actively engineering the vacuum that will pull it into the hundreds of thousands and soon. First, consider the illiquidity crisis that has quietly reached a point of no return. Our proprietary models, which track the ratio of Bitcoin held in long-term cold storage versus the volume available on major exchanges, have just flashed a signal we've only seen once before in history, and that was preceding the last great bull run. The amount of Bitcoin on exchanges has plummeted to a multi-year low, a mere fraction of the total supply, meaning the liquid, easily tradable Bitcoin is vanishing before our eyes. This is a direct, undeniable consequence of the spot ETF phenomenon. These financial behemoths are not traders. They are digital black holes, purchasing hundreds of millions of dollars worth of coins daily and funneling them into custodial vaults with a one-way sign on the door. They are systematically consuming the entire available supply. Think of it like this. There are only 21 million tickets to this show, and a handful of Wall Street giants just bought up 90% of the tickets at the door. And now, they're sitting inside, watching a line of new buyers grow longer and more desperate outside, while the number of tickets left for sale dwindles to zero. This creates a fundamental mathematical inevitability. When demand consistently and vastly outstrips a shrinking supply, the only possible outcome is a violent, parabolic repricing event. The second pillar is the network's metabolic rate, the sheer velocity of value being settled. While the price appears to be coiling, the Bitcoin network is processing more dollar-denominated value than the entire Visa network on its busiest day, a fact that is almost never reported. This isn't speculation. This is utility. This is sovereign nations, multinational corporations, and high-net-worth individuals using the blockchain not a gamble, but to finalize settlements of billions of dollars in a trustless, borderless, and irreversible way. This utility creates a floor of value that is entirely divorced from trader sentiment. It is the bedrock upon which the speculative price is built, and that bedrock is now made of diamond, solid and unshakable. And the third, most powerful pillar is the psychological transformation of the investor base. The days of the panicked retail seller dictating market moves are over. The data shows that the average holding time for a Bitcoin has stretched to over 4 years, a clear indicator that the market is now dominated by conviction holders, by believers who understand the long-term thesis of digital gold and impervious, decentralized property. They do not flinch at a 1% dip. They see it as a discount on a finite asset. This maturation of the investor base creates a market structure that is incredibly resistant to downside shocks and explosively primed for upside breakouts. The weak hands have been shaken out, and what remains is a core of unyielding steel. So, when you see that number, $96,008 with a tiny, almost apologetic red arrow next to it, you're not looking at a price. You're looking at a lie, a temporary illusion created by a market structure that is fundamentally broken. You are witnessing the last, fleeting moments of an old paradigm before it is utterly annihilated by the new. The consolidation here is not a sign of indecision. It is the market gathering every last ounce of energy, pulling back its fist for a punch that will break the sound barrier of finance. This is your final warning, your ultimate call to clarity. The conversation is over. The time for debate has passed. The data has spoken. The question is no longer if, but when, and the when is now measured in days, not months. This is your moment to decide which side of history you will be on. Will you be the architect of your own fortune, or a spectator to the greatest wealth creation event of the 21st century? Do not let this pass you by. Click the like button right now if this clarity resonates with you. Subscribe to this channel because the journey is just beginning. And ring that notification bell with everything you have. Because when the next move happens, and it will happen fast, you need to be the first to know, armed with the conviction that only true understanding can provide. Your future self will thank you for this single, decisive action.